This program was brought to you by PennyMac TPO and Power Plus, their next-generation broker portal that gives you more speed and control over the process. You can now disclose, lock, and manage your loan seamlessly from start to finish, all in one place. It's another reason why greatness lives here.
Welcome to The Interest. I'm Mike Savino. Now, 7 is normally a lucky number, but it's not one that's been good for the mortgage industry. Freddie Mac's rates continue to inch closer to 7, with the average rate for the 30-year fixed now at 6.94%, but others say we've already crossed that mark. Of course, to borrowers, it doesn't really matter which side of 7 we're on right now, because home buying remains unaffordable for so many consumers. So how high will rates go? And how do originators find success right now? Our own Christine Stewart has more from a couple of industry veterans.
People go through 5 stages of grief when rates go up. They get angry, they bargain, they're in denial, then eventually they come to acceptance.
Are you feeling sticker shock every time you go to the store? That's what home shoppers are feeling too. And it's not going to get any better, with the average rate for the 30-year fixed rate mortgage hovering around 7%.
The end of July, we actually had seen a really nice dip in rates, and it looked like we had seen a peak in June.
But other mortgage experts said it was only natural that rates would climb. They also follow inflation. We didn't see that trend earlier this year because the Fed was still engaged in quantitative easing. Not anymore.
Once they took QE and stopped, mortgage rates did what they always do. They follow inflation. Inflation goes up, mortgage rates go up. Inflation comes down, mortgage rates go down.
So how much further will mortgage rates rise?
If we see that inflation, core inflation readings specifically, are not improving, if we see that the labor market still extraordinarily strong, the rest of the economic reports showing consumer spending, that could actually see mortgage rates push up into the 8s.
But Barry Habib of MBS Highway thinks we're about to see inflation numbers peak.
As you could see, the readings for 2021 and 2022 are all elevated. And with the Fed hikes, the slowdown in the economy, you should start to see lower readings come out.
And then what happens? Experts we talked to disagree a bit on just how far rates will come back down, but they agree that won't happen until the middle of next year.
This is not the time to act out of fear. This is the time to seize an opportunity.
So how do originators respond?
You've got to have a large prospect pipeline. You've got to be talking to a lot of people.
As you build your customer base, also remember that customer sticker shock will wear off.
And as they become normal, consumers are going to be less concerned with the idea that, hey, I missed out on these other great rates.
You also need to help customers understand the market. Let them know that prices aren't likely to drop as much as long as inventory is tight. But if they're in a position to buy their dream home while the market is still cooling off, they can take advantage, and they can always refi later.
If you miss it slightly when it's going down, you can get terms negotiation and a lower price. If prices already started going up, you're not going to be able to negotiate.
For more tips, listen to The Principal, the Mortgage News Network's daily podcast, available wherever you get your podcast. For the Mortgage News Network, I'm Christine Stewart.
Thanks, Christine. Of course, affordability isn't just about rates, as home prices also play a pivotal role. Unfortunately, Zillow says affordability isn't going to return to normal anytime soon. A new report from Zillow says that home values around the country are about 25% above what has historically been considered affordable. So let's take a look at the numbers. The typical mortgage for a new home right now is $1,850 a month, and that's gobbling up 30.2% of that household's monthly income. Now, over the prior 16 years, that typical mortgage payment took away 22.8% of a household's income. Affordability needs to improve by a quarter to get back to that mark. Now, you could be seeing a big difference depending on your market. Right here in Hartford, Connecticut, home values are only 2.4% above where they need to be, but several markets in Texas and Florida have home values more than 30% higher. And several analysts project wage growth of as much as 7% in 2023, which would help shrink that payment to income ratio. But of course, if inflation does not slow down, consumers could continue to feel the squeeze. Coming up, Wall Street has a negative outlook for some wholesale lenders.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. It seems Wall Street has taken notice of the tough times in wholesale lending. Finance of America and Provident Funding Associates both held B+ ratings from Fitch Ratings, but FOA dropped to a B- and Provident to a B. Fitch also maintained its negative outlook for both companies. Fitch is cutting positions after deciding to shut down its forward wholesale operation, and the company recently tried and failed to sell its retail division to Guaranteed Rate. Fitch says there's significant execution risk and cash burn associated with FOA's plan to rebuild capital by reducing expenses. Meanwhile, the rating agency is worried that Provident's origination volume and footprint could weaken its long-term value and its earnings potential. Now, Fitch is maintaining its BB- and stable outlook rating for United Wholesale Mortgage, but even with that company, analysts found some potential weaknesses. Fitch pointed to several concerns, one being that CEO Matt Ishbia continues to maintain significant control over the company when compared to others in the mortgage industry. He and his family own a vast majority of shares. And other concerns include the fact that UWM's potential market gains are limited because the company deals exclusively in wholesale. Elsewhere, Fitch maintained its rating for Home Point, but lowered its outlook for the company to negative. This is because Home Point's weaker than expected financial performance. In other news, when Congress created the CFPB in 2010, lawmakers wanted to protect the agency from political influence. So the Bureau's funding comes from the Fed, not from Congress. Well, that may not be the case in the future. A 3-judge panel with the Fifth Circuit Court of Appeals in New Orleans has ruled that this is unconstitutional because it essentially means Congress is giving up its power of the purse. The U.S. Supreme Court has made similar decisions and says that the president should have the ability to remove the CFPB's director, something that can't happen right now. This most recent ruling stems from a lawsuit challenging payday lending rules that the CFPB put in place in 2017. But this doesn't necessarily mean the end of the Bureau. In its decisions, the Supreme Court has said that the CFPB can exist, just not under the current structure. And U.S. Senator Elizabeth Warren, a driving force behind the CFPB, has said that the agency is here to stay. We'll be right back with what else is interesting today.
This program was brought to you by PennyMac TPO and Power Plus, their next generation broker portal. Visit tpo.pennymac.com to sign up.
Here's what else is interesting today. 2 things consumers hate are inflation and taxes. But what if one can actually help you with the other? Well, tax bills could look a lot different next year, with brackets going up by 7% and the standard deductions also going up significantly. So thanks, inflation? The tax code adjusts for inflation every year. You're just more likely to notice it this time because inflation remains at a 40-year high. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.